Hi guys, welcome to this Money Control live stream. Tuesday morning, great cues coming in from global markets. GIFT Nifty above that 21,900 mark, so nothing really to complain about, especially after yesterday's rally that saw the Nifty above that 21,750 mark. Of course, Reliance Industries, big mover yesterday, 7% kind of gains. In fact, 40% of the up move on the index was contributed by Reliance yesterday. We'll be talking about all of these stocks, and of course some of the stocks that will be on the radar today would be the likes of ITC and Bajaj Finance that came out with numbers post-market hours. Also big numbers to watch out for L&T, Dr. Reddy's. So lots of stocks in focus. Also the big event on Thursday, interim budget, what should one be expecting? And what are markets really expecting this time around? We'll be touching base with an expert and trying to find out whether or not we could expect some big bang announcements this time around or not. But of course, as usual, before we move any further, let's take a look at the top headlines at this hour. Well, Wall Street clocked in a record close amid a flurry of earnings. Both the S&P 500 and the Dow Jones closed at a record high ahead of the Fed meet and mega cap tech earnings. In fact, Nasdaq gained over 1% in yesterday's session. Asian markets trade mixed as the Chinese property crisis weighs. The GIFT Nifty, however, is indicating a higher start above that 21,900 mark. Crude prices dip as the debt crisis in the Chinese property sector outweighs concerns over rising tensions in West Asia. In fact, Brent is back around that $82 a barrel mark. ITC delivers a soft third quarter with muted cigarette volumes, even as profit beats estimate. In fact, Bajaj Finance, on the other hand, has reported a 20% jump in profit led by strong loan as well as AUM growth. And in key numbers to track today, lower input costs expected to support L&T Q3 margins. Also, Dr. Reddy's reports its third quarter numbers today. Outlook on US sales and regulatory concerns will be key to track here. Well, before I touch base with my technical expert for today, let me also remind our viewers, keep your stock-related queries coming in. We will try and take them up with our technical expert. So on our live YouTube feed, you could send in your queries with the hashtag AskMC. But on that note, let me introduce our technical expert for today. Joining me, Sacchitanand Uttekar of TradeBulls Securities. Great to have you on the show, Sachitanand. Looking at the GIFT Nifty 21,900 back on the screen. Before we, head into the interim budget, do you think 22,000, a retest of that level could be possible on the charts, especially after yesterday's up move?
Good morning, Nandita. And clearly, I think the kind of upside that we saw yesterday, which was driven primarily by the move in Reliance, we see this particular momentum getting continued, but the way, the GIFT Nifty is indicating an opening somewhere close to around 21,900, we are of the opinion that 21,960 can be a immediate hurdle for the indices. If you look at the weekly structure and the daily structure, we have an island reversal formation on the daily scale with its gap resistance placed somewhere close to around 21,960. So definitely, it is a zone of caution. But if you look at the the way derivative data is placed since the beginning of the expiry 22,000, the call writing action has been very confident. And on the lower side, we have seen a good amount of evidence that 21,500 could be a near-term support. So it looks difficult, but even if we swing towards that 22,000 mark, the chances are that Nifty may again drift lower, and we may see this oscillation continued ahead of the event. So as of now, I think if you look at from a levels perspective, we need a very firm, confident closing about that 21,960 mark on a consistent basis to really conclude that the up move has resumed. But as the data is indicating that we may see Nifty continue its oscillation within the 21,960 on the higher side, and on the lower side we don't see it falling below that 21,640 mark ahead of the event. If you look at Nifty Bank, clearly the underperformance continues. Even yesterday we saw the move primarily because of some short covering. Again, here, if you look at the data, 46,100 remains a very crucial level until unless we don't see a closing above that we may not see any strong rally getting built up when it comes to Nifty Bank, and the contribution may be more on the short side. So even here, the data is indicating that 45,000, remains as a very crucial support zone. But from a trading perspective, it is important that it, continues to sustain above that 45,400 mark. So here we are expecting a range of 46,100 to 45,400 ahead of this particular event. So net, I think we have already seen a very strong outperformance in the Nifty, but somewhere the way data is placed, sustaining at 21,960 and above as of now looks difficult. So it's a cautious zone. One can maintain the long positions until unless 21,640 is not breached on a momentum basis.
All right, that's the view then on the index and the Nifty Bank Index as well. Hold that thought, Sachitanand. We'll come back and talk about specific stocks, especially index heavyweights that have been firing on all cylinders. But let me also bring on board Dhiraj Relli, who's the MD and CEO at HDFC Securities. Great to have you on the show, Dhiraj. I want to first begin by asking you, the kind of pre-budget rally that's at play. Do you think it has more legs, given the fact that interim budget per se is being looked at like a non-event for the markets at least?
Good morning, and thank you for having me. I think you have put it well that this is going to be a non-event. Honorable Finance Minister already told that it will be a vote on account and not be a full-fledged budget. To that extent, we will expect only cosmetic changes and not very big announcements in this vote on account. So that way it will become non-event. But investors do have some kind of expectations, and in their exuberance, they are expecting that some cosmetic changes and some directional messages will come from the finance minister, and that's where we are seeing some build-up, and that started yesterday. We saw after December 4th the biggest run yesterday only in our markets, and that too led by Reliance, which is a heavyweight in the index. So we've seen some kind of a build-up already. I think today also the implied open is somewhere a gap up of 100 odd points on Nifty. So that way, to some extent, that this build-up will continue. But the real bullishness will come only post the budget, when people will start looking at the general elections. And once there is a more clarity emerging on the general elections, that's when we will see a pre-elections rally and rally towards the elections.
Right, you mentioned RIL, of course, 40% of the index gains coming in from that particular stock. So would it be safe to assume that the next leg of rally will come in the large cap universe, given the fact that the mid caps have run up quite a bit, and most analysts believe that mid caps have actually run ahead of their fundamentals? So do you think now the next leg of rally would belong to the large caps?
I think it's not about the large caps or small caps or mid caps. It's about where the value is. As we've seen exuberance in the mid caps and small cap space, the valuations are stretched in most of the stocks, and there is some value in the large cap. That's where the money, smart money, is already gravitating, and that's what will do well. So we will see that the smart money will move into the large cap just because of the not market capitalization reason, but because of the valuation reasons.
Right. So would you stick to the capital goods and infra side of, the opportunity rather than consumption? Because consumption has underperformed thus far, right? But we are also expecting measures to boost rural demand as well. So would you look at consumption plays now, given the fact that they have underperformed quite a bit and there could be room for catch up there?
I think the government thrust will continue on infra and defense, and they will continue to have higher capex even in this vote on account also. We have seen a good amount of increase in the capex post-COVID. From 4 lakh odd levels, we've reached to almost 10 lakh crore kind of a capex at the government level, and that capex commitment will continue. Coming to the consumption space, yes, consumption space have been underperforming because of the lackluster rural demand. And we've seen some green shoots of late in the last quarter or so, where the rural demand is picking up. I think with some of the moves coming in from the government to ensure that we get some kind of a volume increase, margin expansion has already happened in the consumption space, so there is a limited opportunity there, but it will be driven by the volume growth, and that will take some time. But we have changed our stance from a negative to neutral in the consumption space.
All right, negative to neutral on the consumption space. Largely according to ICRA, the markets have had this demand for the removal of securities transaction tax, right? And it has been there for a few years now. And as GST collections have been robust, this demand has once again gained traction. But, with indices at new highs, retail participation in derivatives increasing at breakneck speed, can another hike in STT could be, be on the cards? And if that happens, of course, that would come as a big dampener, right? At least from a market standpoint.
I don't think so. The government has any intention to spoil the party. I don't expect any change in the STT. In fact, what I would expect from the government to work on the taxation on dividend, because dividend is paid post tax only, and to that extent, it is a double taxation in the hands of investors, particularly the promoters. So if there's something can be done on the dividend taxation, that will be good. We've already, have seen tax on the capital gains. We already have STT in place. Long-term capital gain also being taxed now and absorbed by the market very well. So I don't see any significant changes coming in on any thing on the taxation from capital markets point of view.
Aside of that, anything that you would be particularly watching out for from the budget? Anything on your wish list?
I think if you look at since this is an election year, people would expect that government to dole out some kind of a welfare measures. But my personal take is these would be only cosmetic and will not affect the fiscal deficit in any way, because government will continue the glide path of fiscal consolidation. They have committed to go to 4.3% by FY26. So to that extent, I don't see any significant welfare measures coming in this budget. So this will be a simple, some cosmetic related small changes, maybe more directional messages, maybe bringing in somewhat more positivity. And in any case, out of the budget also, government have been doing a lot of work and announcing schemes for poor, farmers, young, youth and women. I think that will continue. In any case, the election dates are likely to be announced, and after that, code of conduct will also be applicable.
All right, that's the view then. Dhiraj, Relli, thanks a lot for taking out time and joining in this morning. I'm afraid that's all the time we have, but it's always a pleasure interacting with you, Dhiraj.
Thank you, Nandita. Thank you.
Right, on that note, let's go back to Sachitanand and talk about specific stocks. Sachitanand, a lot of queries coming in on Reliance Industries, and no surprises there. In the last 1 month, shares of Reliance have gained 20%, right? Arvind Dhakar wants to know whether it's a good time to enter into the stock, given the fact that it is perched at record highs. And a few other, viewers have also, sent in their queries on Reliance Industries as to how to navigate this particular stock. What are your thoughts? Do you see more legs here?
Well, Nandita, in fact, yesterday we have recommended taking some profits off the table for Reliance, because this was our top pick during the Diwali, in the Diwali report, somewhere close to around 2300, 2340. We recommended this particular stock, and we were expecting a price target somewhere close to around 2880, and that particular target has been achieved yesterday. But even if you look at the structure here, the structure, even from a momentum perspective, is still looking stronger. But as a discipline, we have, advised our clients to, take some profits off. If you look at the momentum play, probably we may see an extended move towards 2980 immediately, and we may see a further extension post the budget rally. And we may see this particular stock again scaling towards 3200, 32450. So as of now, I think in case someone wants to, add this stock in their portfolio again, from a trading perspective, a decline towards 2800, 2830 could be an ideal zone wherein the stock can be accumulated again. And the gap that we have seen so far at 2700, I think that will be a interesting level to watch out from a momentum perspective. So one can keep a stop loss somewhere close to around 2730 on a weekly closing basis and accumulate it only on declines.
All right, that's the view then. But let's also talk about the stock of the day. ITC reported a soft quarter. Profits have beaten estimates, up 10%. But it's the hotels and FMCG segments that have shown in the quarter gone by, and there's been weakness in agri and paper businesses. But cigarette volumes have been subdued, as was being expected by the street. We have a couple of brokerages. They have trimmed their EPS estimates also on the stock. Given the fact that FMCG has been an underperformer, ITC, if you look at the last 1 year chart, I think it has gained well compared to other peers, right? So here on, how would you play ITC, especially post the numbers?
Well, for the last 5 months, the stock has hardly done anything. It has been, being more range bound within 430 on the lower side and 460, 480 on the higher side. Even right now, the recent data indicates that 480 remains as a very crucial hurdle. And on the monthly scale, we are seeing that the stock is struggling to hold above its 5-month exponential moving average, which is placed somewhere close to around 445. So even yesterday we saw closing below the same. And plus, if the results are disappointing, we may see the stock declining towards 410, 420 zone. So as of now, I think the data is not supporting any long positions. On the contrary, in fact, in case someone is short on the counter, he can maintain a stop loss at around 462 and continue holding the shorts till 420, 410 levels.
All right, that's the view on ITC. But what about a Bajaj Finance? Profit has been good, 20%. Strong loan growth, strong AUM growth. It has done pretty okayish, but asset quality has deteriorated on a quarter-on-quarter basis. And if you look at some of the brokerage views, they have maintained their buy rating. But, they've also pointed out that, the asset quality disappointment has largely been due to slippage in personal loans. And, of course, there has been an embargo on 2 of its products under which it cannot disburse loans. And, in fact, the street was watching out for some commentary from management on that front. Jefferies, in fact, has said that the company may submit revised standards to RBI in the coming quarter. Bajaj Finance, I think it has been holding up above that 7,000 mark pretty smartly. Do you see, more upside on the charts here? Or would you say that, it is it's going to continue to be stuck in a range?
From a broad perspective, in fact, we are expecting that the stock should scale eventually towards 8,700, followed by a price target of around 9,600. From a 12 months plus perspective. Even right now, if you look at the last few months, the stock has been oscillating within the band of around 7,600 on the lower side and 7,000 on the 7,000 on the lower side and 7,600 on the higher side. So we may see this oscillation getting continued. But I think definitely, one can utilize this opportunity to add on to long positions until unless we don't see the stock, establishing a close below 68.80 on a weekly basis. The major trend still remains positive. After a strong up move for the last 4 months, we have seen just a consolidation here. And plus, if you look at its monthly ADX value, it is quoting somewhere close to around 28.4. So I think it's a good indication that the stock is going through a good consolidation phase ahead of the next leg of up move. So the stock can be accumulated, keeping a stop loss somewhere close to around 68.80 on the lower side. And from a trading momentum perspective, one can maintain a stop loss somewhere close to around 7130. And on the higher side, the positions can be reviewed somewhere close to around 7,500.
All right. Positions can be reviewed somewhere around 7,500. That's the call on Bajaj Finance. For all those who had a query on this stock, hope this addresses your query. But let's take up some other viewer queries now. Mahendra has written and he wants to know your thoughts on a CESC. After not such a good up move over the last 5 days, the stock has made a good resurgence yesterday. 4.5% kind of gains there. But from a trading perspective, how is this particular stock looking on the charts?
The support at 128 is very important. As long as it holds above the same, the bullish trend remains intact. On the higher side, we have already seen, some resistance at around 140, 141 mark. But looking at the way again the price is resuming its upside, we see this particular stock displaying a firm breakout about 141 levels, and probably we may see up move towards 154. So keeping these levels in mind, one can still accumulate the counter, keep a stop loss at around 128, and review positions at around 155.
All right, that's the call on CESC. The next query comes in from Aslam Sheikh, wants to know your thoughts on a UPL. He has 2,000 shares at the rate of 585 rupees per share. So he's making some loss here. And he wants to know if there are chances of any kind of a recovery in the next 6 months. Of course, UPL, any attempts at recovery has, really not, given any kind of color, right? And I think we've discussed this stock at length for quite a few sessions as well. But for somebody who's making a loss here, how should one really go about it, given the fact that, I think from his buy price, it's down somewhere around 8%.
So I think the trend is saying that, in fact, it has been maintaining a low top, low bottom sequence, which is a bearish trend. And every time we see a recovery, it fails to get converted or extended into a fresh bullish sequence. So even here, the support at around 560, 555 mark was very important. It has again slipped below that particular support, but the condition is quite oversold, given the fact that it has been scaling lower for the last 6 weeks. So probably we may see a bounce back here again. 580 would be an ideal level in case if he, gets an exit there. I think it will be a good opportunity for him to reduce his positions. But the major trend still remains weak. We don't see any major improvement in the trend. If you look at the monthly ADX, even here, it has broken out about 25 levels, which is again, strong indication that the current trend, which is on the lower side or on the bearish side, it may continue. So sooner or later, we may see this particular stock, falling towards 500 levels. So every uptick in this particular counter towards 560, 580 zone would be a good opportunity to reduce long position.
All right, that's the view then. The next query is coming in on an Alkal Amines from Maheshwar Bhanu. He holds shares at the rate of 2,448 and he's been holding for 2 years. Any thoughts as to how he should go about this holding?
He can maintain his long positions. The stock is just consolidating here. It is maintaining its support zone very well at around 2240, 2260 kind of a zone. Its weekly 200 average is also placed there. If you look at the monthly chart structure, last month we saw a very strong bullish engulfing formation, and it has again reconfirmed that particular base at around 2200. So probably he can continue to accumulate this particular counter. On a swing perspective, the moment we see the stock again resuming its up move towards 2600, I think that will be a sign of a quick reversal in the trend. From a bearish trend, we have already seen consolidation, and in case 2600 is breached in next few weeks, we may see a very strong rally getting built up in this counter. So I think you can keep accumulating this particular counter, keep a stop loss on a weekly basis below 2060.
All right, that's the view. Hope that answers your query. What are your thoughts on a Suson? Varsha Gajjar wants to know your thoughts. Suson, of course, has seen a stupendous run over the last 1 year or thereabouts, multi-bagger stock, so to say. But would you still say that it's looking overbought at the current juncture, or do you see scope for more upside on the charts?
Well, on the weekly scale, there's a clear negative divergence. The RSI has been declining and the prices have been scaling higher. Recently, we saw a bearish dark cloud cover formation on the weekly scale, which again is reconfirming this fact that the stock is not able to sustain near that 45 mark. So it's better to avoid any aggressive long positions here. But since the momentum in the last 2 weeks has been good, probably she can keep a trailing stop loss somewhere close to around 39.50 and review positions in case if the stock, moves or tries to move towards 50 levels. But as of now, aggressive long positions should be avoided. But for existing longs, she can maintain a stop loss somewhere close to around 39.
All right, avoid aggressive longs here. That's the view. But last query really for the day. Rahul Das wants to know your thoughts on Adani Enterprises. Of course, yesterday a strong up move coming in on Adani group of stocks. A foreign brokerage has initiated coverage, sees 50% upside from current levels, saying that the group is too big to ignore. So Rahul wants to know your thoughts on where Adani Enterprises in particular is headed on the charts. Time to ride the momentum here?
Yes, we can. In fact, the sequence has been very strong. It has been forming higher bases. The recent base is again confirmed at around 2,900. And the way price has been expanding, probably we may see an immediate swing towards 3240, 3,300 levels. So keeping a stop loss somewhere close to around 29.30 on a closing basis, even momentum can be participated here on the bullish side. The major weakness for this particular stock may only unfold in case the stock starts trending below 27.30 from here on. So as of now, I think the structure has been improving, and the momentum that we have seen yesterday has been decent enough. So we may see a further price uptick here, and we may see the stock scaling towards 32.40 immediately.
All right, that's the view on Adani Enterprises. With that, we've come to the end of the query segment. But Sachitanand, what are you flagging off for viewers this morning?
Nandita, two stock ideas, both on the long side and from the auto space. Yesterday, we saw the Nifty Auto breaking out from its 4 weeks of consolidation. The index itself is displaying a bullish pennant formation, which is again a continuation pattern. So we are recommending long positions here in Escorts. The stock was in a low top, low bottom sequence. Through the entire January series, we saw a good amount of short positions. But the way yesterday's price action has been evolved, on the 60-minute scale, we have a bullish inverse head and shoulder formation, which is indicating a price target somewhere close to around 32.50 on a positional basis. From a trading momentum perspective, 31.60 is the price target that we have indicated. We are recommending long positions with a stop loss at 3010. And the second stock, again, which has been in a low top, low bottom sequence on the bearish side, has been Eicher Motors. But again, in yesterday's price action on the 60-minute scale, we are seeing a good, strong evidence of a positive divergence. So we are expecting a short covering move in this particular counter. The stock may scale towards 38.30 on the higher side, and that's why we are recommending building fresh long positions here. Keep a stop loss somewhere close to around 36.60 from a momentum perspective.
All right, those are the recommendations coming in from Sachitanand. But before I let you go, Sachitanand, how should one really position themselves ahead of the interim budget? Yesterday I was talking to another technical analyst, and he said avoid leveraged positions in the F&O space ahead of interim budget. Would you concur with that view?
We are also advising the same, and it is better to get more clarity post the event, and pre-event positioning could be harmful. We already have the VIX, which is trending close to around 1550, 16 levels. Plus, we have an evidence of a very strong breakdown, which had happened at around 22,000 levels, 21,960. So the Nifty is expected to be range bound ahead of this event. So as of now, we are not advising any aggressive long positions here. But post budget, in case if we see the Nifty scaling about 22,120, that will be a very good opportunity again, wherein some aggressive long positions can be built in. But as of now, looking at the seasonality effect and the event in play, it's better to be light on positions on either side.
All right, that's the view. That's how you should position yourself ahead of the interim budget. With that, Sachitanand, as usual, always a pleasure interacting with you, and thanks a lot for addressing all of your queries as well.
Thank you, Noel.
Well, with that, we've come to the end of this edition of Morning Trade. But on a programming note, big interview coming up at 12 p.m. today. Ramdev Agarwal of Motilal Oswal takes us through what strategies one should look at in the current market scenario. In fact, his outlook for 2024 and which are the pockets, where you can find value, when it comes to the coming year. So tune in for that. And of course, we are timed out on this edition of Morning Trade. So from me and the entire team, thanks a lot for tuning in. But stay tuned because coming up next is Opening Bell.